Hi, this is Brent from TradeGuild.blogspot.com, and it is Thursday, August 10th. And I'm not going to go through the whole market right now, but if you want to see a good video of what's going on with the market and the SP, the Dow, the Nasdaq, check out Brian Shannon's website, alphatrends.blogspot.com, and he's got a good video tonight. So I don't feel there's any need for me to redo that. I have some ideas for you. I'm going to show them to you in video form tonight instead of just listing them so you can see some of the setups. These are not going to be a comprehensive chart reading on these. They're just going to be, quickly going through them, looking at the different setups. First up, I have INO, which is medical instruments and supplies. I'm not going to try to pronounce the name. But anyway, let me zoom in here. And this is a long position. All these first stocks are going to be all longs. And basically what we have here is it's just kind of moved up above this 50-day moving average. And it's kind of consolidating in this area. You can see volume on the up days has all been green. And TSV over here has moved above that zero line. So all in all, I kind of like what I see there. Here's money stream in this red in the top window. This is a leading divergence, and this, by the way, is a Warden pick. Let me give it proper credit where it's due, from Telechart, and I think it was a pick tonight. But anyway, you can see money stream there and TSV are both positively divergent, and they're in leading divergences. They're leading price. Also, I want to show you. Let's see. This is my screen. I've got a 10 and 22-day moving average, and a custom cumulative indicator down here, and RSI down at the bottom. Basically, I've got this crossover, the 10 over that 22, which is a buy signal, a long signal. Typically, I like to buy these on a pullback either to this 10 or to this 22-day moving average. You buy that pullback, and then you can use the 22-day moving average as a stop should it close below that. So you can really reduce your risk. Anyway, you're going to be seeing this screen a couple times tonight. The way I use it is a confirmation. I get that 10 over the 22 for a long, and this blue cumulative indicator that I've constructed crosses above the 10 and the 20-day moving average. That confirms the long position, and then finally RSI is above zero. So all three of those things have happened here, and this is a long setup. Again, I'd keep that stop under that 22-day simple 22-day moving average. Let's move along, and next up is IHR, and this is a pick from Cato with a K, not Sensei Cato, off the tag board. A lot of good ideas over there. And this is an ascending triangle. As you can see, I've drawn in the trend lines, and more or less it is held together. It's closed the last couple days within this formation. A lot of these have broken down lately for some reason. Well, the reason is we're in an intermediate downtrend, but this one so far is held together. As it approaches the apex, the point of this triangle, we expect to see a breakout to the upside. Again, in this situation, I would use this 50-day moving average as your stop. So if it breaks below that 50-day moving average, not on an intraday basis as it did today, but on a close, then you go ahead and stop out. That would also take you out of that formation. So there's no reason to stick around, should that break like that. Let's move along. And next up is NGAS. And basically, there's not much to show here. It's basically, we have this trend line over here depicting this consolidation, and it is broken above that trend line on good volume right here, and everything looks good. So it's just right now struggling with this 200-day moving average right in here. That's resistance. So if you can buy it towards the lower end of this trading range, above this trend line and below the 200-day moving average, then you'd simply use the trend line as your stop, or this rising 50-day moving average. So that looks pretty good. Let's move along, and next up is TLB. And here we are, TLB. And you can see here I've drawn in the trend lines and we have a symmetrical triangle. It gapped up real big and has now just consolidated those gains. What we look for in these formations is for volume to taper off into the formation. Now it's not really clear there, but if I scroll out to a 3-day chart, now it becomes very obvious. You see this line descending volume, and that's what we look for. That's a good sign in this particular formation. It's nearing this apex now, so we expect to see a breakout above that. Should it break down under this 50-day moving average here, I would stop out of that position. Moving along, VVUS, VVUS Inc., Medical Instruments, that's our next one. And what we have here, basically, it had a huge, move and just worked on a consolidation that failed and broke below this 200-day moving average. It's back above it, and it's consolidating a little bit more now. It's fallen back down to this 200-day moving average again. And if we can zoom in, that makes it a good place to buy. So, your stop right here would be, below 340. There's also this little rising window gap between here, and this lower section right there should act as support. So you can use that as a stop. That works good too, I think. Let me see if there's anything else I want to show you here. Here's that confirmation screen I was telling you about. The 10 days crossed above that 22-day. My custom cumulative indicator has crossed above, and it's basically just constructed on closing prices and volume and stuff like that. And again, RSI is above 0. So VVUS also looks pretty good here. And let's move along again. THOR, which is THOR Corporation. Again, medical instruments. It's been kind of an interesting little sector. It seems like it's popping right now. Let me zoom in here. I'll take a closer look. And here's the interesting thing. I was just talking about that gap. This is called a rising window. Here's our gap between here and here. And again, the bottom of that rising window in this situation should act as support. And you can see it did. So this is an ideal spot to buy. We got that doji today showing a loss of momentum. You can see the loss of momentum in these candles. You can see how big this one was, and this one's a little bit smaller, this one's a little bit smaller. There's the doji. So the bears have lost momentum. It's more or less, I think, just a pullback here. And you can see there's the trend, linear regression channels, and it's bounced out of that trend. It's moved up, and I'm going to show you one more screen. There's money stream. You can see it's in a leading divergence way up there. So I think everything looks good here on THOR. Again, your stop is underneath the bottom of this gap. So let's move along. I think I have time for one or two more in this video. And this is HH Hooper Homes Inc., which is Specialized Health Services. And this is a pick from Sensei Kato on the tag board. And I've got these red trend lines drawn in. You can see it's a big symmetrical triangle. Sometimes these act as bases, which I suspect it's doing now. And as this point is formed, we look for a breakout there. And I'm going to zoom in a little bit. You can see it's acting pretty well the last couple days. And we're going to take a look here at money stream, and you can see what's going on there. It is in the stratosphere, more or less. That is a leading divergence. Very, very bullish. So I think this is a nice pick from Sensei Kato. I think it's going to break out. Your worst case scenario, I'd put a stop under this little hammer here. Let's zoom in on that guy, show it to you. There's the hammer. And hammers, what the Japanese say is a hammer. They're hammering at a bottom. So there's your bottom right around 260. So I would put a stop below 260. That's going to do it for this video. I've got a lot more ideas. I'll be back.